Good morning, it's Alyssa Corum and Ed Carson here reporting to you live from our newsroom in Los Angeles. It is Monday, November 26th, and on today's show, we're taking a look at Apple as well as Eli Lilly and American Express. But first, let's check in with those major indexes. So right now, we are up strongly across the board. The NASDAQ is leading the gains, up about 1.5%, while we have the S&P 500 up 1.3%. The Dow also up 1.5%. So we are seeing strength here, but let's put this in broader context of what we've been seeing lately.
Yeah, there was a lot of selling last week. The Dow was getting close to its October lows, the NASDAQ did. We fell back into a market correction. We really didn't do much last week to that encouraging. This is nice, but you need to see a lot of days. You need to see this actually close well, because often in a correction you have morning rallies and then it fades into the close. But you need to see a lot of these gains. You can see these 1 or 2 days or even brief periods where you'll rally, and it doesn't really mean much along the way. You need to see it sustained again and again.
That's right. And Apple, I think, is a really good case study of why you don't want to be trying to guess the bottom or take one individual day of strength as your sign to buy. So let's pull up Apple's chart on November 1st here, and we're seeing the stock retaking that 50-day line in some strength.
Yeah, and this is the day when it had earnings. So this was basically the best looking big tech out there, really looking strong, that relative strength line. Then things didn't go so well after that. I mean, you might have thought this is a time to buy, not so much. If we could look at the chart for November 7th, you'll see that things went a little differently after that point.
And with the magic of our, there we go.
Yeah, and you see like, oh boy, here we are. We had sold off a lot. Now, actually, by this point, we were rallying 2 more days, and this is November 7th is the day we had the market follow through. So you might think, okay, here we go. Now we've had our sell-off. Everybody's dealt with the bad outlook out ahead, but that's okay. It's going to bounce right back. The market's on fire.
Apple's on sale.
Apple's on sale. There we go. It's right here. It's like get this early holiday deal. But you're trying to guess a bottom here. You just what's the odds that you're right? You just really want to get the odds in your favor. Maybe you're right, but bad things could happen if you're wrong. And I think if we pull the current chart, so that November 7th rally doesn't look so great anymore.
Right. So those who thought that the stock was on sale on the follow-through day really are seeing the stock lower here today. So again, that's why you don't want to be trying to catch the bottom. And when you're talking about putting odds in your favor, that's where breakouts come into play.
Yeah, that's why you want to see the stock set up in a bullish base and then break out for a buy point. You're not going to get the cheapest price, but the whole point is that you want the odds in your favor that the stock will rise from that point and rise significantly. And that's why those breakouts can work. They don't always work, but the odds are better or more in your favor. You're buying in the middle of just a big downturn. You have no idea what's going to happen next.
That's right. And let's take a look at Eli Lilly. Speaking of stocks that are setting up in bases, Eli Lilly is one of them. It is about 3% below a potential buy point here. And we've seen the medical sector lately producing a lot of stocks for potential watch lists out there.
Yeah, I mean, for whatever reason, medical's often strong because people still get sick, and the government and insurance companies are going to pay for it. And so Eli Lilly's been acting fairly well. The sector's acting well. Big Pharma's acting well. They obviously have been on a big run. Its profit growth is pretty strong. Revenue growth is sort of single digit. That's actually, you're seeing a lot of stocks with single digit revenue growth be leaders right now. But this is something to definitely watch. But again, the market is in correction. This stock is not at a breakout anyway. So this is definitely one to watch, but not really touch right now.
That's right. Definitely have to take into consideration those overall market conditions. And American Express is nearing a buy point as well. Those shares up over 3% today. It's now about 1% below a cup with handle buy point. As of right now, we're not seeing too strong a volume here today, but this is a name out of the Dow, and it's seeing its RS line at a near-time high.
Yeah, I mean, that's really positive. You're definitely seeing this is one of those that's leading the market. Will this, if the market turns, maybe this will be one of those that can really drive forward, like Eli Lilly. But right now it's just this is the time to be building the watch list and constantly changing that watch list. Back on November 1st, you probably had Apple on a watch list. Not so much today. And so maybe these will continue to do well, and when we rally, these will be there, but maybe not.
That's exactly right. When the market is in a correction or under pressure, that's not the time to check out. You want to stay engaged, be looking for those signals of when it is appropriate to get back in, and already have perhaps a few names good to go and, you know, ready to pounce when the time comes. All right, everyone, thank you so much for joining us today, and be sure to subscribe to our notifications across our social channels. We are on Facebook, Instagram, Twitter, and YouTube, so you can check out all of our content there at any time. And be sure to head to investors.com throughout the day and after the close for all the latest market news and analysis. Thanks for watching, and we'll see you back here tomorrow. All right. Thank